BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Hello, good morning, welcome back. Let's have a look at the charts on a Monday morning, which is for me one of the more interesting days of all of the whole of trading weeks, right? So we start with traditional markets opening up slowly, bit by bit. You've got Forex, you've got commodities, you've got pre-markets, then you've got American markets opening officially later on, and obviously throughout the entire thing we've got crypto, which seems to be drifting up, and Bitcoin now pushing that 20 moving average on the daily, so the Bollinger Band Center. So it's at this point now that it's actually managed to recover all the way up to the last area of major resistance, which currently is being rejected from. So that's no big deal, really no big deal. It's actually, quite good, I have to say, that it's actually managed to do this rather than break down immediately. Remember, a lot of the breakdown here was to do with things outside of the chart. We had that horrible weekend, didn't we, because of those guys in those other countries doing stuff to each other. That was effectively the instigator of the major portion of the downside, right? So outside of the chart, we were pushed down. However, the chart did point to further downside, generally speaking, and we were kicked down the stairs. This is the sort of thing that happens frequently. I know I'm not saying that there was a giant conspiracy between other countries to bring down the price of crypto. That's kind of crazy, but that is what happened, whether they like it or not. They did that, right, to the price, not intentionally, just through default. So, but that's that's old news now. Where do we stand right now? So if you're taking it on face value, what we're looking at is recovery, and the last area of resistance, which is here, exactly here. In fact, perfectly to the tick. Today, on today's candle body, perfectly to the tick, 20 daily moving average. Okay, fair enough. So let's take it to the 4 hourly, where the death cross has already been retested and punctured through, which offers a single tiny, and I wouldn't really put too much weight to it, but it does exist, and the older Bitcoin gets, the more it becomes, I suppose, the older any chart gets, the more it likes a simple moving average than an exponential moving average. It's not always the case, obviously, but it's become a bit more like that. You can see that there has been support around it before it broke down, so maybe this is the last area of resistance. Either way, let's take ourselves to momentum. Let's see what momentum looks like. So after the bullish divergence on the way down, finding this low, or you could even say this wick low, we've managed to recover from there and move a good 12% into, well, all the resistances, which have all broken and continue to break, and now we're at the last, well, I'd say the last one, but really there's two, ending at $67,000. That's the last area of resistance. Okay, cool. Momentum seems fine. No bearish divergence on this one so far. We can take it to the 1 hourly if you wish, and there is none on the 1 hourly either. So the momentum is still good. Momentum still suggests that it can keep going, and if we do keep going, then this means a break. A break from this resistance would take us straight up to about 71,500. And if you get to 71,500, you could get to a new all-time high. You really could. So all of this is pretty sweet. Now the MACD has been converging in on itself. There's no positive cross here, so I'm going to stick my neck out here and say it. With a setup like this, if we do break resistance and over today or tomorrow make a positive cross below the 0 point and then creep up over the histogram, that would be an enormous breakout. A breakout which can take Bitcoin into the 80s. Maybe even the 90s. I know how it sounds. I do know how it sounds, but I'm saying it anyway. And it's like I was saying on Friday and on Saturday and yesterday. The way that stocks closed, they closed in a very bullish way. Okay, I say very bullish way. They closed. I don't know. This squiggle is incredible, but they closed in a way to suggest we can bounce. Bounce significantly on a higher term time frame, being this weekly, and on a shorter term time frame, being a 4 hourly, and I'll show you that as well in a minute. So 20 weekly moving average is a dream support, right? It's a dream support. If you ever get to that level and you take and you buy that dip, most of the time it works out, and I say most of the time because it's 65% more likely to work out. So again, you're 65% more likely to win, which means most of the time. That's the definition of percentage, really. The odds are in your favour. Most of the time it will work out. Not all of the time, but more often than not. And so that is a major support there. And that's so far on this week. We can see that we're up by a tiny fraction, 0.35%. If we take ourselves to the 4 hour, there was also another support here. I believe there was. What's going on here? Oh, I'm on the pre-market, that's why. There we go, yeah. Slightly different setup. So we're talking at SPX here. And we're moving into a 200 exponential and simple moving average on the 4 hourly. So again, this hasn't opened yet. So this is the main thing. This is why I say it's interesting on Mondays. We've got pre-markets. We've got obviously traditional markets. You've got Forex and blah, blah, blah. So if we're talking the SPX chart, then we are looking for a major bounce on the 4 hourly too. When American markets open, which isn't for a while yet, 2:30 British time, Greenwich Mean Time. So we've established that Bitcoin is pushing a resistance. We established that stocks are pushing support. So if stocks get support and bounce from here, then the assumption being we move up through association with stocks as well. And it could mean that actually stocks do go on for a reversal, and then that is it. And we've finished with all this downside, or at least for the time being. Or we can just consider it to be an everything bounce, which I think is probably the most reasonable thing to think about, because that was a nasty pullback over the last couple of weeks for the S&P. If we do bounce from here, then that's great. What you'd really need to do is break above this last week's breakdown point. So if we see a weekly closure above, we'll call it 5,160, basically a bullish engulfing candle on the weekly, then excellent, we go for reversal. If we get rejected anywhere below that, maybe even the 10 exponential, which is just below 5,090, then yeah, different story. You can also take yourself to the shorter term timeframes and look for resistances here. Since we are curling over now, each one of these areas is going to be a resistance. And again, you're looking for rejection all the way up, really, and see if that happens. But until then, I would expect a bounce on stocks, which should correspond to a bounce for crypto, or a continued move up for crypto, we'll call it. Dixie is a bit of a problem, though. Dixie, look, the daily on the Dixie is looking good after the golden cross, moving all the way up. We're above all major moving averages. We are pushing the 7 simple, which is normally the last stages of a rally before a consolidation. These consolidations happen, and they only cause higher lows, And the goal for Dixie is all the way up here, 107.8. So that's, the Dixie does look good for further upside. To call a particular reversal is difficult, really. I'm not going to say that. I am still actually, to be honest with you, looking for lower highs across stocks and crypto. That's generally what I'm looking for. But remember, validation and invalidation. Just because I'm making these videos early on in the morning and on Monday doesn't mean that my bias or the statistics remain the same by 12 o'clock, 2 o'clock, 5 o'clock, 6 o'clock. I don't sit here and go, well, I made this video and I said this analysis at 9 o'clock. And there is nothing in the world which will change that. Even if I see the price go down, even if I see resistances break, even if I see supports break, I'll still say the same as what I said on Monday morning. No. Look, I know that you don't think that. The occasional noob does think that, and they say, I watched this video 17 hours after you made it. And it didn't go the way it wanted. Yeah, I know, because I was watching the chart with you, mate. I was watching the chart at the same time. I didn't just sort of make this video, stick a trade in and go for a sleep. Although sometimes I do that. But generally I don't. I look for confirmation and invalidation. So I've got a particular setup here which does look like it wants to run, which I actually think that Bitcoin is going to break that resistance. But until it does, I will consider it to get rejected. That's the most likely scenario when you push resistance, that it's going to get rejected. However, the evidence across the board suggests that it will break. That doesn't mean you take a trade out resistance. That's madness. But what I'm pointing out here is that the evidence suggests that actually that resistance will break, and you can move it into the 70s quite easily. But you don't buy the resistance. That's chaos. That's madness. One other thing I was going to show you, though, whether or not it's something you're ever interested in, is oil. Oil has broken out, obviously, of this descending triangle, and it's now coming down to retest the triangle itself. Now, oil is volatile. You like volatility, I'm sure you do, because you like crypto. Commodities could be volatile, oil being one of the most volatile of all, and one that I'm privy to trading from time to time. So I made this trade from the lower 70s up into the mid 80s. I made that trade, so I'm all out. Now what we're looking for is to see if actually we move up from here. Now the trend line is neither here nor there. You can see that it's not perfect, and I wouldn't expect it to be perfect here. I'd be looking more at moving averages if anything, and there's a 200 simple and exponential on the daily here just below $80. So we're talking 79.22 for the 200 exponential, and the simple is basically, we'll call it $80. This is where I'd expect oil to get picked up from, if it were to be picked up at all. And if that's the case, we're likely to be moving up into the 90s, around 93, give or take, roughly. So it's a 16-17% move if we were to get that set up, if that trade works out. Now, obviously, I would rather this not happen just for the state of the world, right? Because what this means is inflation, food, fuel, and everything in between gets priced in on that. So I would rather that not happen, but if it was to happen, I can at least soften the blow a little by taking a trade and making some money out of that. This is all markets are. I don't want this to happen, but if it was to happen, I will try to make some money out of it. I'd rather it break down. I'd rather oil goes down, into the 40s again. That'd be lovely. That would solve a lot of problems for a lot of people globally. But it doesn't look like it wants to do that. I think oil wants to live up here. And why wouldn't it? It's up here now. It's been up here for a long time. It's going to stay up here, I think. And so there's a trade there. But like I said, the reason I bring oil to your attention isn't because there's a setup brewing. It's because actually, oil, for one, whether you want it or like it, it actually is going to have a major effect on every other thing. Because if oil goes up, there is not much chance of a rate cut. Because inflation will creep up with it, as we've already seen. It's a great indicator of inflation just in general. This is why I find it really hard to understand why, the Fed didn't, their CPIs were hotter than expected, because I expected them to be hot, because this chart says, well, inflation is very unlikely to come down as a result of this, because, look, we're going up. Everything, is attributed to the price of oil, so why is inflation going to be going down when you see oil prices rally quite a lot, to be honest with you, throughout the second quarter? 30%. It is what it is. Right, so basically that is it. There is not much more to say as of this moment in time. I don't want to take up too much of your time, but that is basically it. So, summary, we've got Bitcoin pushing resistance, you've got S&P pushing support. We're looking for American markets to open, to bounce on that support, and at least do a dead cat bounce of maybe a few percent, which should give the green light to Bitcoin to break this resistance and continue up into the lower 70s. That's what it says to me. But long term, we've got oil being a problem. We've got Dixie pointing up. So whatever happens today is not necessarily a reversal sign. It's not. It really isn't. We're still seeing signals and setups and signs on broader markets of longer, more drawn-out consolidation. So as much as we are looking for green today, and maybe even for a few days, I still favour the overall vibe of a consolidation across the board through all markets, whether that comes in the face of FUD, or FOMC, or CPI, or just general trading based on the technicals. That's what it kind of looks like to me. It still looks like it wants to keep going down. But until then, a bounce today is the most likely setup given stocks and the red in oil and the nonchalant approach on the Dixie as of this very moment in time. I'm only talking about today and tomorrow, by the way. If you zoom out a week or two, I still think there's a very decent and good chance that what we're going to see is a lower high and moving on to a lower low. So you do still have to be careful. This is a consolidation which, in my opinion, has only really just started, but that doesn't mean it can't be decent bounces. We have decent bounces all the time. In the last bear market, as you might remember, we did the everything bounce 1, 2 and 3 on stocks, and more or less on crypto as well in a bear market. And this is all I'm sort of referring to right now. And everything bounce, really. Right, thanks for watching. I hope you have a nice day. Please like the video at this stage. The algorithm loves that. Leave a comment if you've got the time as well. Other than that, have a nice day. Take it easy.